Business owners and freelancers have tons of things on their plate. Making a little bit of extra time to be able to understand how taxes work can save you tons of money. Whether you're running your own company or you have a side hustle you're trying to get up and running, either way, you need to know the basics so that you can avoid surprises and make sure you're actively doing the right things around taxes. I'm Matt Franchina, AKA the People's Advisor. For the last 16 years, I've been simplifying complex planning, helping people like you protect their health, build their wealth, and secure their legacy. Let's jump into it. We do have a few other videos on taxes, so if you don't find what you're looking for in this one, make sure to go back to the channel and check out some of the other tax videos we've been making. And as a reminder, I'm not a licensed tax professional, I'm a financial advisor. But being a business owner myself for the last 16 years, I've definitely delved into this and been involved in our tax situation, so I've learned a lot and want to share some of those tips I've learned with you. So if you've got a side hustle and you're wondering, do I need to pay taxes on that money I made on that side job or some of these gigs that you've done? The answer is if you made more than $400 last year, then yes, you do need to file taxes and you probably owe some self-employment tax. But here's the big question that comes up is, did you make enough from that job that you need to report that? Well, yes, any of the income you made that was self-employed, you need to report. And here's a big reason why. Whoever paid you to do the job, they're going to write that off as a business expense on their end. And if they do it properly, they're gonna report that they paid you that money. And even if you didn't get a 1099, that doesn't mean that it won't get connected to you. Because when they file it, it's going to be connected to your business, and now your business will have a discrepancy. And the last thing you want is a letter from the IRS triggering a discrepancy notice or maybe even an audit because you didn't report income that you or your company made. So freelancers out there, report the dollars that you made and avoid some of these challenges you might face in the future. As a business owner or a freelancer of any type, you've got to make sure you keep your personal and your business expenses separate. A few easy ways to do that would be open a business credit card, put everything on that credit card, and then reconcile it at the end of every month. Then you know that if there was an expense and it had something to do with business, it had to have happened on that card. If you're gonna use bank accounts, then open a business bank account as well. Keep that stuff separate. It's gonna be so much easier because you're gonna be filing two different tax returns, one for the business and one for the personal. So it'll be much easier to itemize all the business stuff if you have it separated that way. Now, another thing to look at are some of the apps and programs that are out there to help you do this. I highly recommend it. QuickBooks is one that I've used for years and it's world renowned for this type of thing. But what it really helps you do now is to begin to track and have everything logged. It's very easy to export. You can give access to your financial or your tax professional so they can log in and see that stuff. And some of the things that are a little harder to do manually, like splitting a bill. If you are a small business owner, there are odds that some of the bills that you pay are for things that are used for joint purposes. For example, a cell phone bill. Well, you use it for personal and for business. So part of that bill is business, part of it is personal. Inside of these softwares, you can split that bill, put it on reoccurring, and then it's done for you. Another thing that's real important, if you do any kind of driving, tracking your mileage. This is something that's hard to do at the end of the year. You might know how many miles you drove, but it's a lot harder to categorize how many miles were business and personal. So there are great apps that will actually help you track. They have GPS built in. They know when you're driving. They ask you at the end of every drive whether or not you're marking business or personal. So leverage technology to make this easier. Then all you need to do is once a week or once a month, just go in, reconcile your books, make sure what's being automated is done correctly. So when you're filing your taxes as a business owner or a freelance self-employed person, you are basically reporting the inbound revenue that your business made. Well, there's two 1099 documents that you want to be on the lookout for. One is a 1099 NEC, that's non-employer compensation. And this is basically anybody that you did work for, who you were like subcontracted with, and they paid you more than $600, they needed to create a 1099. Those 1099s are to be issued by the end of January every year. So if you didn't get one, then you can go hunting down and asking those companies, like, where's that 1099? I need it to file my taxes. But there's another one called a 1099K. A 1099K comes from these third-party platforms like PayPal or Venmo. A 1099K comes from these third-party platforms like Venmo or PayPal, but they only issue them if you either had 200 transactions or $20,000 in total transactions. Now, just because you didn't have 20K or 200 transactions, that doesn't mean that you don't need to go in there, download that history and report the income. It just means they're not obligated to send you a 1099 form. So make sure you've got that incoming revenue correct and that you report it properly. So if you've been generating profits, then you may have been doing quarterly taxes and you already know some of this stuff, but the IRS is expecting you to file quarterly taxes if you expect to owe $1,000 or more in taxes to the IRS during that quarter. So if you've been doing this a while, maybe you're already doing that. If you haven't been, then you may want to seek some advice from a tax professional, find out if this is in fact something that you should be doing. But remember, they're looking at if you have $1,000 owed in taxes, which has a lot to do with your expenses versus your revenues. Because remember, you may bring in this much, but businesses get the opportunity to write off based on what they spent during that quarter. So you may or may not be owing it. It just really depends on what type of profits you're experiencing. So something to make sure you pay attention to. And if you are filing quarterly taxes, there are 4 dates that you need to remember. This is happening on a calendar quarter. So that would be April 15th, June 15th, September 15th, and January 15th, that these are due for the prior quarter. So let's dive into some of the top write-offs that you have access to as a business owner or freelance self-employed person. The first we're gonna start off with is your home office and some of the different utilities and things attached to that. Small businesses often have a home office. So if you're working from home, you need to take the square footage of the dedicated office and the square footage of the house and figure out what percentage of the home is that dedicated home office. I say dedicated because the IRS says that you need to have a space that's used only for that work, so you want a dedicated space for it. So you now get to take that ratio, write it off of the home rent, the mortgage, the utilities, the internet, cell phone bill, all these different bills that you pay for at the house. Whatever percentage that dedicated space is, you get to write off that same percentage from all of those other home expenses. If you haven't been doing that, you make sure you go get your tape measure out, you start measuring those square feet and you get going on that. Next up on the list, an actual office and some of the equipment and supplies. So if you rent an actual office, then the rent or lease costs of that, that's a full write-off. And then all of the supplies to fill the space. If you just set this office up, you have furniture, tables, storage, all that stuff's gonna be a write-off. And the ongoing things like office supplies, mail and postage, packaging, all that type of stuff is a write-off. If you're a business that has inventory, definitely need to take into account all of the costs of the inventory that you're holding. Those are all write-offs because you had to spend to house that inventory. Even though you haven't sold it yet, you get to write off the cost to have brought that inventory in. You get to write off 50% of your business-related meals. So when you're going out to lunches and you're talking shop and you are getting the word out about your business, those are all a write-off. At least half of it is a write-off. Health insurance premiums. As a self-employed or business owner, you get to write off 100% of your health insurance expenses. So if you're not doing that, definitely write that off. And if you're getting your health insurance through your spouse who's getting it through like a corporate benefit, you might want to consider what the math looks like for you to buy it on your own and get to write off 100% of it. The write-off might actually be better than the cost savings, depending on what that ratio looks like. As a business owner or self-employed freelancer, you might be thinking, I don't have the option for a lot of retirement account contributions, but nothing could be further than the truth. You can open a self-employed pension account, a solo 401k, a simple IRA, traditional IRA, and others. You need to explore which type of account is best for you, but just know this, contributions to retirement accounts are a full write-off, just like they would be for an employee putting money into their 401k provided by their employer. You got some miscellaneous items out there like marketing expenses, some research and development stuff you might be doing, and then also car payments. A lot of people bypass the fact that your car is something that's used towards business. You get to determine what percentage that vehicle is used towards business, and now you get to write off lease payments or potentially the purchase amounts. Now that gets into some details there, but your automobile has write-off capabilities. Make sure you break down and see what you're able to write off from that. All right, last on my list, but definitely not least, are professional and personal development courses, workshops, trainings, anything you can do to better and improve yourself. Those are 100% write-off to your business. So for example, I bought a package of conferences and courses and workshops around marketing, business strategy, development, sales team training. These are all things that I wrote off, and they were all designed to help me grow my business. So what a better place to put money and it be a write-off. It's a double whammy, and you definitely don't want to skip on that. Tracking these deductions can save you thousands, if not more, and they're well worth the time. Look, I understand you're running a business, you're trying to grow, there's lots of things going on, but if you can carve out time to consider this as part of the non-negotiable for running a business is understanding the basic tax code of what is and is not a write-off in your business, it will put you in a tremendously better place. We've got a lot of other videos coming out, and I want you to subscribe and be around for them. Give me a comment below. Let me know if this was beneficial to you, and I always want to know what other kind of videos we can put out to make your life better. So like, comment, follow, and just share this with anyone you know who's a business owner. Let's get the word out. Have an awesome day. We'll see you soon.